Steven's asking, is the PBOC's 300% month-over-month stimulus able to comp the 1H16 comps? Very much no. I think that's a very poor characterization of what happened in January. So the PBOCs, the bank lending and bank credit growth tend to be very much front-end loaded in China. It's not necessarily the front-end loaded. There's strict quotas, lending quotas, so they tend to hit those quotas by the time you get to the end of the year. So there's always this big sequential uptick in January. Certainly, and then PBOC obviously provisions a lot of open market operations and medium-term lending financing to keep liquidity parameters smooth and smoothly functioning into and through Lunar New Year. So there's a lot of sort of mischaracterization around the sequential deltas from a December, quieter period. But if you sort of isolate those things on a year-over-year rate of change basis on 119, I think this deck is updated from Friday. And what you're seeing is on a year-over-year rate of change basis, nothing is happening from the perspective of Chinese credit growth, which is the key indicator that we like to track. Sort of thinking about it from the perspective of, China's economy is very, very, very dominated by, or at least the finance economy is very dominated by bank credit growth and bank balance sheet growth. 78% of all credit in China is sitting on bank balance sheets, whereas that figures something closer to like 30% here in the U.S. So what we're seeing here is bank loan growth. It basically remains in that channel we've seen over the last 2 years versus the up 15, 16, and even rates of north of 17% year-over-year bank credit growth that we saw in the original Shanghai Accord. And then you obviously had shadow financing start to really re-accelerate on the back end of that initial ramp up in bank credit growth. So to really continue to perpetuate that acceleration in economic activity in China, and that as recently as January is down 10% year over year. So if you just sort of just eyeball those two charts, going back to those charts, the green boxes is Shanghai Accord 1, red box is Shanghai Accord 2, and there's no wonder we haven't seen any reasonable response in Chinese economic activity. It continues to decelerate, it continues to hit new lows because we haven't seen the commensurate response out of policymakers to perpetuate new highs. And again, going back one slide to 118, the reason why all this is happening is because China is comping up what we consider to be a very insurmountable, impossible comp with respect to its economic growth and activity in secondary industries, which is the primary part of the Chinese economy that we're keenly focused on. So to summarize all that information, China can't comp the comps. That's the end of the story. Awesome.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, plus Macro Select and our quarterly investment outlook. Try Hedgeye Risk Manager today. Now for the low price of $24.99 a year.